I am excited personally to share this information to you guys because it is really the foundation of trading, especially in a micro cap and nano cap penny stocks trading. So before anything else, we will have the disclaimer. I'm Jess, and I'm not a financial advisor. This is purely financial education, and the purpose of this is to educate everyone on how to carefully trade their stocks. And we don't do advice. We just share tickers, and it's up to the listeners or the members to trade on a specific ticker. So let's get started. Okay, let me share to you. I am very excited on this topic, psychology of trading 101. So psychology of trading, basically from the word psychology, it is the behavior, the study of behavior of trading. Okay, so let's see. There is a question here. Why the chart moves in certain direction? It goes up and it goes down. It goes sideways. So there's only three directions: go up, it goes down, and it goes sideways. Those are the direction. But we will understand today why those direction happens, or why it goes up and down or sideways. So this is the answer: because of the people behind the market. All right, so there are 5 different types of traders. Primarily we have the breakout traders, the momentum traders, the swing traders, short sellers, and deep buyers. So we're going to elaborate what are those traders, because you are not trading the market, but you are trading the people behind the market. And every one of us, we have different behaviors. Some people are breakout traders. Some people are short sellers, just like me. I love to do short. And some people do love to deep buy. So we're going to focus on short selling and deep buying after this, but we have to understand other characters behind trading the market. Okay, firstly, we have breakout traders. Breakout traders is being defined as a buyer who buys stocks that break out at the previous high. Okay, I'm going to repeat it again. Breakout traders who buy stocks that break out at the previous high. This is the most common strategy, and it usually comes with a good news, a catalyst, and especially earnings, just like quarterly earnings, just like big companies, Amazon, Google. Usually there's earnings, people are excited, and we know that there's certain companies like Amazon are really making good, performing well, so people are excited. So let's see. This part here, this is a chart, okay? This is the example of a chart that is ABIO. The ticker name is ABIO, and this is a micro cap market. And basically, this one has a good news, okay? Good news, and people are excited. So as you can see here, there's an arrow and there's a circle, okay? Early in the morning, around 10, it went up because of the catalyst, the good news, and then it went down. So if you are a breakout traders, you are gonna wait in the afternoon or mid-morning, or in the afternoon if the candle go up, okay, the pattern goes up. So if you are a breakout buyer, you usually wait for a good timing, which is, where is your timing? All right, this is your timing here. Okay, so you put a resistance, okay? You create a resistance on this circle line here, and if you are a breakout buyer, you're gonna wait for the breakout. From the word breakout, meaning it's breaking out from the previous high. So where is the previous high in this pattern? As you can see here, it is around 9, okay? 9, that is the breakout, and then in the afternoon, you put a resistance line here, the yellow line, that is a resistance. And then when a breakout buyer see that the candle are going up and on the level 2, it's really ramping up, just like maraming bumibili. There are people are excited to buy this one more time. So the breakout traders will go in on the 9. Okay, the value of stocks is $9. So they go in, the entry will be 9, and they're going to take advantage because it is breaking out. Okay, they're going to take advantage of the stocks breaking out from the previous high, which is the 9, and then of course they are going to make money with this. All right. So next one is we have the momentum traders. What is the momentum traders? It buys into strength and joins with the breakout traders. Okay, yung momentum are they don't really, unlike breakouts, they are waiting for the breakout. And the momentum traders are the people who are joining those breakouts. They're riding the wave, just like if you see a surfer, usually it waits on the wave, right? And when the waves go up, and eventually the surfer goes in and ride on the wave. So this is like the momentum trader. They like to wait, and when there is a breakout and it is being confirmed, momentum traders goes in and buy. All right, so that is how momentum traders do their trading. They love to do the momentum part. Okay, let's see here. In this momentum trader, as you can see that the breakout is around 9, right? And it joins with the breakout traders, and after that, let's go back, and after that it goes up. Sorry about that. It goes up here, and we know that every pattern, once there is a breakout and there's a momentum, usually they are scared when the candle or the chart goes really fast. So usually when that feeling of emotion right now, because right now they're excited, they're making money, and they don't want to lose that, so they usually sell out. Okay, they're gonna sell out. That's why, as you can see here, it is a small red candle. The red candle meaning that some of the momentum buyers and the breakout traders sell out their shares. All right. So usually, as you can observe here, when there is a momentum up first wave, and we have the second wave. Okay, so those people who are kind of late momentum traders, late breakout traders, they usually goes in on the second wave. They wait for the pullback, and once the pullback's there, that's the time they buy the shares. Okay, so that's the momentum trader. So we're not gonna elaborate more on that, because we're gonna focus on short selling and morning dip. Okay, let's move forward. Let's move forward to swing traders. Swing traders are traders or who buy stocks closing strong with a PR catalyst. Okay, just like Shirley. After Shirley, she told me that she likes to trade overnight. Okay, usually those traders who like to trade overnight are known as the swing trader. Assuming I buy stocks in the afternoon and then I held it overnight, and in the morning I usually sell it out, or I'm gonna hold it for a long term. So those are the swing traders. They usually don't do intraday. Okay, they don't do intraday. They just do trading in the late afternoon and goes out in the morning, or held it. Depends on if they want to be a swing trader long term or a swing trader in a short term. So that's how swing trader understands the ticker. So here, as you can see, in this kind of trader, a swing trader, this kind is just the overnight. All right. So as you can see here, the long swing trader buys at 9. Why? Because he sees that there is a resistance and support. There is a support and resistance here. The red line, that is our support. Okay, support, usually that is a mental understanding that if you know the technical analysis and you learn the same lessons, just like support and resistance, and all the traders do understand the concept of support and resistance. So it's usually a self-fulfilling prophecy. Okay, so if it is a self-fulfilling prophecy, why? Because they do understand that once the this line here touches the previous high, it usually stays there. Okay, especially when there's consolidation. All right. Here, this is a swing trader. He buys the stocks in the afternoon before closing and held it overnight because of the PR. What do you mean by PR? That is public promotions, good news, catalyst. The understanding of this is, as you can see in the previous morning, in the afternoon, the chart is really very, very active and very excited. So now, usually when swing traders do understand that there's a huge potential, the possible potential that it will go up one more, okay, because of the good news or the catalyst. Because of that, they are gonna buy in the afternoon, and as you can see here, it has a good confirmation, and the stocks from $9 it went up to almost $19. So imagine that if this swing trader bought that ticker ABIO, this ticker ABIO around 9, and in the morning, okay, in the morning pre-market it went up to $19. So basically it went up for more or less 50%. So the psychology of this part here, once those swing traders and the breakout traders, momentum traders held their stocks overnight, assuming some of them do that. So what's the next step? Okay, if you are making 50%, okay, if you bought $100 and you made 50% of that, 100 shares or 1,000 shares, you made 50% of that. So meaning in the morning, I will sell it because I'm making a profit. So that's the psychology of this. If you are a swing trader, you usually sell your stocks in the morning because you might, I just want to take a profit of my stocks because it's making money for me. So that's why, as you can see here, in the morning, which is this part, the swing sells take the profit, short covers, breakout buys. Okay, we're going to discuss on shorts later. So here, as you can see, the stocks went down, and after pre-market, 9:30 a.m., it suddenly went up a little bit for some, just like chaser, they want to chase the stocks, and then suddenly went down. So why these stocks went down? Okay, we're going to answer that question. But because of that, of course, previously I just told you that swing traders do love to swing it, and then they make profit. That's the time they sell. If you sell a stocks, it usually goes down. So right here, let's see what happened. Okay, before answering that question for swing trader and why the stocks goes down, let's see what happened during the pre-market. Okay, this is a pre-market in between 9:30 5 to 9:30. That's a pre-market. All right, so we're gonna focus on this part, the pre-market gap up. In the morning, just like you woke up around, I usually wake up around 7 and eat my breakfast and check my email and everything, and about 8 to 8:30 I use my scanner and check out which tickers will go up 50% or more. So in this scenario, ABIO went up to 50%. So that's 50%. That's a huge percentage of a gap up in the morning. Okay, as you can see here, it gap up 50%. So if it gaps up 50%, and because of the catalyst, what happened next? Okay, that's the time short seller come in. Okay, short seller love to see the stocks are really overextended. When it is overextended and it's gap up in the morning 50%, it's like 30%, 50%, 100%. They love to see that. Why? Because primarily short seller wants to short on the top or on the strength, short on the strength, or sell on the strength and buy at the weakness. So here, this is very important. This is the main my main strategy. I created a lot of data on this strategy, pre-market gap up, and we created a lot of data. Why it is important to gather data to build confidence and you know what you're doing. Because short selling is a good opportunity, but it comes with a risk. If you don't have data, if you don't have confidence on your strategy, it's hard. Just like it's a gamble. If you don't have data, if you don't have a basis of doing this strategy, it is really high risk. So it means you need to create a data, gather, observe. How are you going to create a data? Primarily observe the ticker. Okay, starting next week, I'm going to send you guys a ticker, and that ticker is usually a pre-market high, and then you are going to observe that behavior. Okay, why the stocks go up and then it goes down, or why the stocks go up and then break out. So you need to understand that by understanding the psychology behind. Okay, so let's go back to short seller. Short seller loves to short on extension, okay, and overextended. On this part here, because it is pre-market, usually pre-market gap up is the best in its best strategy for short seller. Okay, why? Because we will answer that. Okay, here let's see the chart first. In this part here, let's go back. A short seller, as you can see here, there's a red line on the top, right? Why this a red line? I created a red line on the top. That is the pre-market resistance. It's very important that you create a resistance and support. Resistance and support will protect you. Resistance and support will help you control yourself from the risk reward part. Okay, so here, if you are going, I put a blue arrow at the red candle, right? The big bar red candle. That's the time you come in with your resistance on the top. Okay, assuming if the stocks go above the red line, you go out. You go out, whatever it takes. Okay, once you have a confirmation that it doesn't go up above the red line, that's the time you short the stocks. Okay, this is very important, guys. Very, very important. If you're going to focus on short selling, this is very important understanding that you have to create a support and resistance. Support and resistance will save you, and you have a understanding that whatever why did I put here as my resistance. Okay, what is resistance? Resistance you put on the top and support is at the bottom. Okay, resistance is just a ceiling, a ceiling, just like a house. If you have that's a house have a ceiling, and the ceiling, you would know that that's your maximum. Okay, that's the maximum one. Once it go above that, that's the time you go out. All right, so here, as you can see, it touches the multiple candles in pre-market. This the big bar green, the green bar, the small bar, the green small bar, and the red bar in pre-market. So meaning this part here is your exact resistance. And then you go in once you have the confirmation that these stocks will not go above the resistance. Because why? As you can see here, below there is volume. There is a huge red volume. Okay, as you can see, there's a blue arrow at the bottom, and there's a huge red candle. That red candle is 1.25 million shares that they're selling. If the stocks selling is above 1 million in 2-minute candle or 4-minute candle, that is above 1 million shares that being sold out, meaning that is a bearish sign. Okay, that is a bearish sign. Please understand what's bearish. That is a, meaning the stocks is not that's weak. Okay, it's weak, meaning it's going to go down. So this is the part that you have to understand. You create the resistance at the top using the pre-market, and after that, once you have the resistance, check the volume. You have to check the volume whether it is green or red. When it's a red that is huge over 1.25 million, why I know that is 1.25 million? Because you can see there is numbers on the side on your right screen. Okay, on your right screen there is numbers 125, 1. Those are 125 million shares. Okay, as you can see here, it is a red candle. Now you know it's bearish. And then you go in on this, you short this stocks, ABIO, and then you cover on this yellow line. This is your support. The question is, Jess, why how did you know that that is support? Okay. How did you know that this line here is the support? I will answer that question. All right. So let's finish this slide. Okay. I went in, I short the stocks at $19 and cover, meaning I buy back the stocks of around 12.50. So roughly, if you have a $19 stocks and then you cover, so you made $6.50. All right. So it is very important to know the reward and the risk reward. So we're going to discuss that. You know, a week from now, the risk reward. But it is my goal right now is for you to understand the psychology of what's going on, why the stocks goes down and go up. Okay, here as you can see that the ABIO went down because pre-market is overextended, and the swing traders, the momentum traders, and the breakout traders sold out their stocks during this day in 9:30, 9:31, 9:30, 9:32. So they sell all their stocks. So that's why the stocks went down all the way down to 12.50. And once the stocks shows weakness, short seller take advantage of that. Okay, the red bar is what we love for short seller because we see weakness and we take advantage of the weakness by shorting on that specific stocks. Okay, here it usually short selling or pre-market gap up strategy usually 9:30 to 11:30 a.m. Okay, it's usually on that timetable. If you're trading part time, and if you wake up in the morning and then you can trade this pattern, which is a pre-market gap up strategy 9:30 to 11:30. Okay, let's move on. So as you can see, that's the volume and that's the resistance. All right. So let me explain to you guys the reason why the stocks went down. During pre-market here, okay, in this chart again. So as you can see here, I created a line, a pre-market resistance. Why I created that line? Because it touches most of those candles. You know, the wick. This the wick. You know that I showed you the previous videos on the different parts of a candle. That is the wick, the highest wick that touches most of them, or you could adjust this a little bit. That is your pre-market resistance. It will keep you safe, and you need to understand that once the stocks went above that, you have to cover. Okay, you have to go out to play safe, and in that part, as you can see here, we have a short risk, okay, about 20 cents risk compared to the reward. Okay, here let's move on. That's a pre-market resistance, and that's the line how I cover. Okay, I cover meaning I buy back the stocks. Okay, the yellow circle, I cover my position. And then why did I cover my position on that line? Okay, that's the question, right? The reason behind was on the previous day. The previous day high was around $9. Okay, there's a previous high that is this chart here was yesterday, and assuming today I traded this chart here is today. So here, as you can see, there is a resistance there. Okay, the resistance on previous day becomes support. That resistance on the previous day becomes the support of today. Okay, so let me try to repeat that because this is very important. Okay, I created a pre-market resistance on the top of pre-market gap up to protect myself, and of course I short the stocks around $19 or $20, and then I cover that stocks on the circle part. Why did I cover that? Because I already an- anticipated that it will bounce on that part because of the previous high, previous resistance. On that line on the previous day, okay, on the previous day, that's the highest. The highest um, that's the highest performance of that chart on yesterday. Okay, that's $9. So because of the understanding of support and resistance, most of the traders do understand that on today it will not go all the way down there because they have a huge resistance on the previous day. Huge resistance on the previous day, meaning today it will be support. Support, it will bounce back. Okay. Here, the resistance of the previous day becomes support, and today the support it becomes a reality. Okay, because traders do understand. Oh no, on the previous day that's the highest. Meaning, if I will not go out there, I might lose my profit. If you shorted here around $19 and you uh, cover it around 9, usually you will cover, or else it will bounce back. You're gonna lose your profit. Okay, before it bounces back, the people, the short seller will cover it. So usually when you cover, meaning you buy back the stocks, it usually has a response of upward direction of the candle, the green candle. As you can see here, there's a green huge candle. That's the short seller covering. So that's why this candle went up on went up all the way up into this resistance here. So that's the psychology and the understanding of why the pre-market gap up goes down. Okay. Next part here, a dip buyer. Okay, I call it morning dip. If you are a dip buyer, you usually buy strong stocks on pullbacks. Okay, this is very safe kind of trading. Okay, because as you can see here previously, you know that it will have a bounce. Okay, it will have a bounce on this part here in 9 because of the previous day resistance. Okay, it has a resistance, meaning that's the block. Okay, the block that will usually a block that would hold you from going down the candle. The candle will have a huge resistance here, and that's become support. And when once you're a dip buyer, you take advantage of that too. Oh, you see, oh yeah, I see that this chart here gonna bounce back because it has a resistance on the previous day. Because of that, I'm gonna buy my stocks around this part here, which is around 9-ish or 10-ish. And once you are a morning dip buyer, or you are a dip buyer, you buy your stocks around 9 because you know that it will bounce back up here. Okay, so that's the psychology. Morning dip buyers love some strong stocks on pullbacks. Once they have a panic selling, there's the panic selling from the momentum buyers, swing traders, and other momentum they are doing the panic selling. This is usually the red 1 2 3 for these, also known as a panic selling. Panic selling for the buyers. Okay, this is the panic selling of the buyers. So usually short seller take advantage of this part. And then once it goes to the resistance on the previous day, the morning dip buyer take advantage then. Once the short cover on this $9, morning dip take advantage of that. Oh yeah, I know that the stock's gonna go down, go up because there's a lot of short seller covering. Once they are covering, it usually go up, and morning dip buyers take advantage of that, so it becomes a profit for them, buying on stocks on the bottom. So that's the strategy of morning dip. They usually buy at the bottom, buy on the weakness, and sell on the strength. That's the morning dip strategy. Okay, morning dip strategy is buying at the weakness or buying at the bottom when there is a resistance from the previous day, and then and selling that stocks on the top. Okay, that's the morning dip, and morning dip, of course, is in the morning around 9:30 to 10:30. Buys 12.50, and then that's the resistance. Next is they sell that around $18. So with that, because they know the understanding. Why the question now is for the morning dip? Why did the morning dip sell in this part here? They sell their stocks around $18 or $19 because they know that there is a huge resistance on this part here. All right, so that's the secret of dip buyers. Dip buyers are gonna sell at the bottom, and they buy at the bottom and sell at the top. Okay. Okay, let's summarize this video then. All right, first one, breakout traders, momentum traders usually go in on the breakout part. Okay, that's the breakout traders and the momentum traders. Okay, when there's a breakout on the previous day or on intraday within the day, they usually buy the stocks and cover at the top, cover at the weakness. Okay, usually breakout traders and momentum traders. Next are the swing traders who loves uh, to buy the stocks before the market closes, and then they cover on the next day. So usually short sellers do short the stocks pre-market when there's a gap up of above 30-50% gap up. Usually short seller go in that part because there's a lot of swing traders, breakout traders, momentum traders are panic selling their stocks. When these traders, swing traders, breakout momentum traders, they're gonna sell out their stocks. They're gonna panicking. Oh no! Oh no! Oh no! I'm gonna lose my money. I just want to cover. I'm making a profit right now, so I'm gonna sell these stocks right now. I'm gonna sell it out so that I can keep my profit. So that's how the stocks go down on the next day. And of course, should seller do understand? Oh yeah, I understand that these buy traders, they're long traders, are gonna panic selling. Short seller gonna take advantage of that. I'm gonna short this stocks around this part here and cover with the resistance. Okay, so that's the support and resistance. And morning dip, once it touches the support here, morning dip take advantage. Oh yeah, there's a support at the previous day. I'm gonna I'm gonna buy the stocks at the bottom. So with confirmation, so the stocks went up and they cover at the top. Okay. So in conclusion, you're not you're not trading the market, but you are trading the people in the market. So that's the psychology, that's the behavior of traders. Okay.